All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the 8th of May. Today we're going to play Look into the Future game. So out of curiosity, it's funny, two of you just typed in, let us know the good news. Give me some good news for Tuesday. Can someone tell me what happens tomorrow? If you read the newspaper, it's been all over the newspaper. What happens tomorrow? Anyone know? CPI. That is actually on Wednesday, but that's a good guess. CPI on Wednesday, PPI on Thursday. I'm actually looking for something different. Rate hike was last week, Russ. That's also a good one, but it's not correct. And there you go. Perfect, David. We have the, I'm going to call it the debt ceiling meeting between Biden and Kevin McCarthy. So, my goodness, that's funny. So I've got the border situation gets worse. Kamala Harris dies. Biden steps down from president. And I just need to wait another 30 seconds. Someone wants to see a YouTube. There we go. So debt ceiling between Biden and Kevin McCarthy. Out of curiosity, what does Biden want? Anyone know, what does Biden want? Because it's been in the news for, geez, at least 8 weeks. But right now he's just meeting with Kevin McCarthy. Spend as much money as possible. That's kind of funny. Abraham. Yes, I want to raise it. So yeah, I'll type it in. Raise debt ceiling with a clean bill, which means no concessions. What does McCarthy want? What does McCarthy want? Any idea? There you go. You got it. Cut spending. Who said that? Stewart. They want budget cuts, right? Now, just a couple tad bits of information. Our beautiful previous Yellen out of money June 1st. So someone please tell me, when does all this get figured out? When does all this get figured out? When are we 100% good to go? Perfect. Last minute, May 31st, roughly midnight Eastern Standard Time. So we've only seen this, what, a dozen times? Is it May 30th ADP, Abraham? Let me take a quick look. No, it's the 31st. It'll be the 31st. I was gonna say, I wonder if there are only 30 days in May, but I know there's 31. Okay, we've seen this a dozen times, right? I think President Trump was the one who was most likely to let us go into default. It's going to get solved, at least if we look at past history. Past history is never future, it's never guaranteed. Let's just say it that way. Past history never guarantees future results. But what will happen between now and then? Just if you were a betting man. If you're a betting man, what's going to happen between now and then? A lot of noise, I'll give you that. A lot of BS, that's kind of the same thing. I'll give you that. What else happens between now and then? Yes, I will agree with that too. And that's where I was heading with it. Volatility and lower stock market based 100% on fear. Agreed. That's what we see as well. So we might have some protection back on the banks. We might get some protection back on Apple. Everything else is roughly protected, but that's what we see. That's where we're at, and that's what we would agree with. Now, I'm going to put this into a mathematical perspective for you. We've done this a couple times this year. If Bill Brander was here tonight, he kind of sent me some information. But I did a little bit of research on the PE ratio, which is ridiculously high. It's at 23.94 as of my birthday last Friday. Historically, the median value of a PE is 17.83. And here last year, we were at the 19.3 in just a general area. I wanted to work some numbers with you guys. If the median value PE is 17.83, the S&P PE right now is at 23.94, but since World War II, it's more realistic to be at a 19.3. Our earnings were expected to be somewhere between 217 to 220, 250 actually. But they're coming in lower. Is anyone surprised that the earnings are coming in lower? Nobody better say yes. There we go. 3 no's popped up pretty quickly. So our earnings are coming in lower. You can't earn as much when you have higher inflation. You can't earn as much when you pay more to buy your materials or your cost of goods. This is a standard. And if you went with the 217 at the beginning of the year, roughly earnings are down 8.6%, which is funny because the market was up 8.6%. Here we have a conflict of fundamentals equaling valuations or real price. What if you get the double impact of lower earnings and a lower PE? And this comes right to institutional and I'll call it institutional. I'll call it artificial intelligence, and I will also call it, what's the third one? Institutional, artificial intelligence, and program trading. And not the standard program trading of stop losses, but this is where they input this information, and when they say, okay, computer, if we are, I'm going to read that comment. And natural dumbness, right? But they input this into their computer models and they say, okay, if we get above 41.88, it's time to sell. We are overvalued. So that's all those institutional economic models. Artificial intelligence will go a little bit different. They're going to say, hey, it might be 19, which is 41.55. Artificial program traders will do more round numbers, and they'll just put the round numbers in there at 4,200, which is why we've been having such a problem getting over some of these areas, why the market just won't seem to get above them. But we obviously have the lower earnings. If we have lower prices in our stock market, if they're not artificially inflated, and we come back down to that average from all the program traders, here's where you've seen me make the comment that, hey, our risk to that downside, I think I've said in the past, was 3,600. Here's how you come out with 35.66. If you just take a round number of 17, you'll be at that 3,500. If our earnings are hit by inflation, lower PEs, higher cost of goods, interest rates, you can make a saying for it to be down around 15.5, which puts you at 3,100. For these standard metrics, and look how I'm cheating right now. Our PE is at 23.91. If you do the multiplication for a PE, if you want to see if people think we're overvalued, our PE is 23.94 is the PE on Friday. Multiply that times the 200 of current earnings. That puts us at 47. And all I'm doing is I'm taking this PE where we're at right now times the lowest earnings of 200. That puts us at 47.88. That's how Morgan Stanley, actually, I was going to say JP Morgan. That's how Morgan Stanley came up with, we could go to 4,800 this year. What if we did it by the original 219 times the 217? You want to see how unrealistic this is? 23.94 times 217. That gives us a price of a market of 51.94. So when all these economic models were coming around for the beginning of the year, and you basically heard people calling it BS, there's no way. Yeah, they're standard numbers, but there's no way we could get to 5,200. Mathematically, yes, but realistically, fundamentally, it just isn't there. We don't have the opportunity to get to these returns this year. They're just not in the cards. And understand, from 217 down to 200. That's a 16.4% decline since January, when everyone was coming out with the standard, yeah, we're going to be somewhere between 217 to $222.50 of earnings this year. Revisions. They've revised the earnings of the S&P 500 down 16.4%. Yet we still have a market up 8%. This is where that dumbness that we talked about, the natural dumbness, if you're really expecting a huge return in the market this year and you're all in, you're in mutual funds, you're not looking at a way to protect your positions, that is natural dumbness. We have a recession coming. We have earnings are heading down. PE ratios will also decline. Anyone think that we're going to have rate cuts this year? Can we stick in there rate cuts at all? It doesn't seem like rate cuts to me. Well, Kevin, the banks, the Fed might need to bail out the banks again. I don't see it. Not that they have a lot of credibility in the first place, right? The Fed doesn't have a lot of credibility in the first place. But I don't see the Fed saying, hey, we totally overshot the mark again. So we're going to need to cut rates. It's just not there. We don't have that, I don't know. I'm thinking out loud and thinking that just doesn't add up. It does not add up whatsoever. So I don't understand. I just, it doesn't make sense to me. So, again, when we come to these situations, and this is just where I'm going to finish off, when we come to these type of situations where stocks fall much faster than they rise, who wants to be protected? I know we're waiting, and I'm just going to say, I know we are waiting on, let's say, Bank of America, right? Bank of America has at least a 45% upside from where they were trading before. Baidu has at least a 70% upside from where they were trading before. Disney, who reports on Monday, has at least a 50% upside from where they were trading before. Ford has a 200% upside. Under Armour, which reports tomorrow, has a 250% upside. What are some of our other core holdings that I'm forgetting right now? Visa has only a 10% upside, but it hasn't moved very much. Apple's already there. Apple's moved. It's where you would expect it. Dollar General. We go Dollar General has a 15% upside. Google L, geez, it has a split, right? So Google L, though, still has about a 35% upside. JP Morgan, duh, Kevin, has a 20% upside. Meta, duh, Kevin, has roughly an 85% upside. And these are all the previous highs of the stock. Micron, 85% to previous highs of 109. Square, roughly a 90% to previous highs. Under Armour's there, Visa's there. I mean, we have some big opportunity, some huge opportunity. And the expectations are through summer. Most likely, I wouldn't say it's a sell in May and go away, because if they put a pause on earnings, we'll get another artificial bubble, so to speak, right? A nice little bounce. But I do think in the next month or two, we're going to be protecting. We're going to be making up more to the downside to create more cash in portfolios, to be able to add the more shares down the road. Under Armour before the market opens tomorrow. Disney after the market closes on Wednesday. Disney looks to be doing everything right. I'm pretty sure the Guardians of the Galaxy is Disney, with $114 million U.S. Open, well, not even better, but more overseas. Another $200 million Open for a Disney movie, which means the cash cows are coming back. Boy, what if Disney took the time to just say, you know what? If Disney could just make peace with Ron DeSantis, boy, does it have some nice upside into the future. It really, Disney is one that has some pretty significant opportunities. And again, they're making the changes. They're doing what needs to be done, and they can really, really go higher. Just something to remember, Disney usually beats 78% of the time. I'm getting that from Bespoke Data, which is also listed on CNBC. So it will be interesting to see if they can hold some of these gains that they have. But what a big opportunity you have in Disney. Under Armour. Someone spoke to me on Under Armour, so let me answer that question. Under Armour's traded as high as 27 just last year. Yet we have issues again with how do I say it? Issues again with inflation, but with for a while there, the biggest concern was what Biden was going to do with China. And so because of that, we are sitting here somewhat in the wings, just wondering what's going to happen. They had great earnings last time. They popped and couldn't hold it. So again, we're looking to, if they pop and can't hold it, we'd be looking to see if we can't protect higher. Another good reason why we want to double up on our protection. Can't wait to get over to money block, where they will allow us to do that in IRAs and Roths and pension plans. It's just can't wait to get away from Schwab. That's all I can say there. Can't wait to get away from Schwab. But boy, sitting below $9, huge opportunity for a pretty good bounce when it comes to Under Armour. And again, their competitive advantage is they do the slave labor, cheaper materials through Asia. They might have a problem if they're buying everything in dollars, and dollars has inflation, well, then we've got a problem, which we kind of knew this already, right? I don't know if it's going to be a huge problem, but yes, if if they're buying these goods in dollars, the dollar's not going as far as it used to. So hopefully that'll answer. Well, Dave, let me know if that answers your question in regards to Under Armour and why we're still looking at them and what we're seeing in that regard. So keep me posted. Let me know what's going on there. Do you think it would be next year's election before some of these stocks can get back to their highs? That is another great question. And so the short answer is, even if it goes to next year's election, new policies have to be put in place. So let's go back to Bank of America. Bank of America, when it comes down to it, Bank of America is nothing more than perception. Same thing with JP Morgan. They both had killer earnings. And they, JP Morgan moved, Bank of America really didn't. Only reason why JP Morgan moved was because they bought a bank. So for them, it's perception. There's no reason why Bank of America couldn't be back up to 55. And there's no reason why JP Morgan can't be back up to 175 to 190. Baidu, not really affected. They are somewhat affected, and it depends on if there's an issue with the United States, but Baidu is the Chinese Google, right? And Baidu's just waiting for China to come back online. Huge opportunity, Baidu. There's nothing there that jumps out and that we will need to worry about. That's the short answer there. So we're still working on that one, so to speak. All right, Disney shot themselves. It's political too. Shot themselves in the foot, got into people's business. Chapek is out of there. We're back to Iger, who got him to 200 basically. His policies, what he had in place. Another opportunity to see that go back. I don't think we need political correctness with a better president there either, to be 100% honest with you. I think we're going to be doing okay. Ford, people can't figure out how good their they can't figure out how good their I can't speak. How good their financial side is and how much money they make off of it. They've always guessed that one wrong. It's nothing political there. Under Armour's retail, they have to get out of their own way. Visa was doing fabulous in regards to what am I trying to say here? I just can't concentrate. Visa was doing really good in regards to where they had to get back from. Not a major problem there. Google L management, problem there. It's unrelated to the president. We have Meta, problem with management wasting money, unrelated to the president. And Micron and Square, again, unrelated to the president. So I don't know. We have some pretty easy opportunities here that don't relate to next year's election to have things going higher. So I'm not too worried about it as I'm looking at presidential stuff right now. But great question. All right, here we go. Where are markets in this week? Lower. I'm just going on the fact that I'm not expecting them to get along for their debt ceiling, so it's going to spook the markets. If you look at the Dow, it's technically bullish, but my expectation is we'll come back down and touch the 50-day in the next couple weeks. That's 33,102 from 33,618. We've got a 500-point drop right there. S&P, same thing, bullish. 41.38 dropping down to 40.45. We have a 95-point drop right there. NASDAQ, same exact thing. 12,256 dropping down to 11,854. What, 380-point drop there. Changed May, looking to end May at a negative 2% instead of a positive 2%. Earnings, pretty slow on earnings. We're just going to start the retail earnings with Tapestry, formerly known as, not Lululemon, was it? Just forgot, brain fart on what Tapestry was. I'm just looking at the clouds coming in over the mountains, so I'm getting a little distracted here. Inventory reports, CPIs on Wednesday, PPIs on Thursdays. Look out for revisions. It will not surprise me to see revisions occurring, where last month they went down, this month we're probably going higher, and don't be surprised to see revisions that are not doing as well as you would have expected. Okay. Meta hires IA chip team, moves to divest from customer. Little information on Meta. What does a Fed pause mean for investors? This is from the iShares from BlackRock. Boy, that can't get any bigger, can it? Let's just shrink that down a little bit. Interesting article here on what a Fed pause would mean for investors and where our market could go. I really like the article, so please spend your time reading through this one. It'll help you understand what a realistic expectation is, and I love that they go back in time to look at returns. The S&P will not break above its range soon, says Goldman Sachs. Here are 6 reasons why. I found these 6 reasons interesting, and they're kind of hidden in here. But inflation remains sticky. Reason why it won't go higher. Pricing in the best of all worlds. Even if inflation moderates and rates fall, there is no recession, but we lose our pricing power. Equity valuations remain high. Our market's too high priced for all those stupid AI and program machines. Equity volatility, or the VIX, remains too low. Historically, it's going to be higher. The recent expected results and earnings is already priced in, and it's not for the future quarters. And last but not least, market concentration is a problem. The largest 15 companies have delivered actually over 90%. It's 92% of the S&P's rally comes from 15 companies out of the 500 and what, 17? Could you imagine 3% of the S&P is responsible for all of the earnings and rallies so far? That is just a little messed up. And I guess that's all I had for you. Although I thought we had this one. Let me take a quick peek on what this one is. Maybe I do have a little bit more for you. This was a Brokers Express article. Huh. I'll just grab this one. I thought it was important, but for some whatever reason, I did not grab it. Oh, that's one I already have up there. Why do I not have? Oh, there it is. All right. Questions. What questions do you guys have for me? What questions can I answer for you guys? And it looks like we're just going to beat the thunderstorms. What questions do you guys have that I can get answered for you? William, of course. So the question is it better just to get out and get back in? So if you get out and get back in, you could have taxable events. Blue sky rules, you have to wait 31 days if you're going to take a loss to get back in. If you do have a profit, you're creating a taxable event for this year. Just because I think something and I've done all these mathematical equations and can prove to you what should happen doesn't mean it's going to. So if I've learned anything, it's that I can do all the work in the world and the market still doesn't care. So with that, I just think back and I'm like, it is what it is. And so we go in and we protect. We go in, we protect. Might it be a good idea to get out if taxes weren't an issue, if I could have a crystal ball that worked 100% of the time so I don't lose anything on the way back in? Yes. But that's why I wouldn't do that. Opinion on Kanivu IPO from Johnson & Johnson. I was going to talk more about that on Thursday. It's the spinoff of Johnson & Johnson. As I've looked at it, and as I'm starting to understand some things about it, it doesn't, how would I say this? I'm not a fan, but I'm not a fan because I haven't done enough study. I'm not a fan because I feel it's a break off, right? Stuart, give me some time to do some research on that one. I'll get back to you. But they really, I don't know. I would say give them time. Give them time. Give them time to prove themselves. Boy, it's 15 billion in net sales. I know they're just beginning to trade on the New York Stock Exchange. KVU, I know, I thought it was really quickly, right? Haven't they done nothing but gone down? Not too bad. I wouldn't be investing in them for a year. And I'm just going back down to standard new stocks. I'm sure whoever did their IPO has a cost basis, was as high as looks like 2703. And my expectation is watch it come down to that cost basis of $20. In 6 months, you'll have a release of shares. Treat it as a new company. It really wasn't given the hype that you would have expected for a new IPO. In fact, last week, I'm pretty sure out of all people, CNBC kind of ragged on it. So it's one of those things that you're thinking to yourself, it has the sales, but does it have the legs to run in the market? Probably not. So you treat it like an IPO and you give it a year to work out all the kinks, the release of shares, and you see how the earnings come in. I mean, right now it's purely speculative, but we'll find out. That's the short answer. Any other questions? For those that joined late, this week we're looking to get all transfer paperwork out. For some people that have SEP IRAs, trusts, they're trading through an LLC or a sub S corp, we're going to have a little, we're going to be sending you a little more paperwork this week, but we're going to be getting everything done here in the near future. And that's where we're at. Everything should be out by the end of this week. All right, guys. Any other questions? I'm trying to stall here for 30 seconds if you have any other questions. But let me know. And other than that, you guys have a great week, and we will look forward to seeing you on Thursday. All right. Good night, everyone. Bye-bye.